Hey, everything go double double, oh, go double double. Hey, we're talking about double tops, double bottoms, highs and lows as a chart pattern in this section. Let's get into it. It's your boy, Professor Josh. Okay, so guys, in this particular video, we're going to be talking about double tops, double bottoms, okay? Highs and lows as it relates to price action. We're also going to be talking about how to trade these setups and these chart patterns and multiple time frame analysis. Guys, tops and bottoms and highs and lows refers to price action. So the highest price that the chart goes, that's referred to as a top. The lowest price, uh, the lowest price the chart goes to, that's referred to as a bottom. So when we talk about double bottoms or double tops, these are areas where the chart touches those areas twice and rejects. Okay, so double tops and double bottoms are used as setup entries in chart because they're chart patterns. Okay, they can also indicate reversals. Okay, they're usually popular and they're seen a lot with supply and demand zones where we go more into foundational sniper plays. You'll hear about supply and demand zones more in depth, but we did cover it here as well. Okay, and they're also common and popular at support and resistance levels and pivot point levels. Okay, so when we get to a particular area, a double top or double bottom can indicate a reversal. Okay, guys. So, guys, one thing I want to also mention. Okay, day highs, day lows, pre-market highs, pre-market lows. Those are also areas where you can see double tops, double bottoms as entries. So double tops and bottoms, what are they? Okay, well, they are reversal patterns observed based on technical analysis where a stock or commodity touches a price more than once or comes around the same price more than once. Okay, and this is what it looks like. Okay, this is a double top. You see on the chart the first top, the second top. It touched it twice, so it rejected, and then we moved down, okay? That's why they're called double tops. Okay, here again, first top, second top. And you see how sometimes it takes some time for us to get to the second top? That does happen. It doesn't have to be at the same time, and then we can move down. One thing I want to tell you guys, okay? Pay attention to this. Double tops and double bottoms are not always going to be exactly at the same place, but they're usually close. How I measure them is if we have a bottom close to the wick of the, if we have a top close to the wick of the first top, then I consider that technically a double top. Okay? Same thing for bottoms, guys, okay? Two wicks. You see how this second bottom is lower? Is actually higher than this first bottom. That's what I mean where if the second bottom is within the wick of the first bottom, it can still be technically considered a double bottom, okay? Training pattern. Also here, guys, first bottom, second bottom, okay? And the way people trade these, they wait for a neckline break, okay? But me personally, if we're in demand zone and we have a double bottom, okay, I'm going to take a trade for calls, okay? If we're in the supply zone and we have a double top, I'm going to take a trade usually for puts once I have confirmation. Okay, and I go into confirmation again in the section about foundational sniper plays. Okay, I'm just repeating this stuff over and over to you again. Okay, so make sure you're watching this course like twice. Watch it through the first time just to understand it, and then watch it again where you start taking notes and you start executing, because that's the best way to watch a program and a course. Okay, so let's hop into the charts and see what I mean by double tops and double bottoms, okay? So right here, look at this. We're at a pivot point here. This is Amazon. Look at this. We had a bottom here, a bottom here, a double bottom here, and we had a little push up, okay? And then over here, we broke the double bottom, but we had another push up here. But let me look for a better example of a double bottom for you. Okay, this would be considered a double top. Look at that. We touched this area like 4 or 5 times. And guys, tops don't only have to be double. You can have a double top, a triple top, a quadruple top, 5 tops. And the more tops they are at a particular price point or area, that lets you know that there's a lot of resistance there and we're probably going to go down. So look at this. We have so many tops here. Okay, and then we come again here during market open and we actually did a double top here again. Okay, you see how it's not exact? This top and this top is pretty much exact to the T, but it doesn't have to be exact. And after we touch that, what did we start doing? We started heading downwards, okay? And what I might do if I was trading this is not getting on the first double bottom, but getting on this one potentially, or wait for a drop base drop here, where I will then get in on a drop base drop for continuation to the downside because I want extra confirmation. But that's how double tops work. And double bottoms are the opposite, like I showed you here. Okay, they touch once, they touch twice, and then we have a move up. Okay, so what you're looking for is double bottoms, and we can look for them at other places as well. Here's another example of a double bottom. We're bottoming here all pre-market, okay? And then we bottomed here like 3-4 times, and then what do? We had to push up. So these double bottoms, triple bottoms, quadruple bottoms are all signs that we're about to get a reversal. So those are the tops and bottoms. Now, let's go over the highs and lows. So for example, this is a low, okay? This is a higher low, okay? Pay attention. This is a low. This is a higher low, which means this low is not as low as this one. It's a higher low. That's a sign that we're starting to get more bullish momentum and we're probably going to start heading up. So if this was a demand zone area, for example, okay, if this is the demand zone area, let me draw it better, excuse me. Let's say this was a demand zone area, okay? And we keep coming into this demand zone, but we're having higher lows here or double bottoms. This usually entry to start getting into this trade and wait for a push up. And look at that push, look at that crazy push up out of this demand zone, okay? After we've been pretty much double bottoming and creating higher lows, in this demand zone for like 20 minutes. So what you do with double bottoms and higher lows is look for entry. So we're having higher lows here. Okay, but also what do we have? We have a rally, a base, and a what? Rally, exactly. So your entry will be on the rally, base rally, break here, and you can catch the rest of this move up. Or if you wanted to, there's a potential mini um, bull flag right here that you can count the trade and trade it up as well. All from knowing that number one, we're in a demand zone, but we're continuing to have bottoms. Okay, this is more than five. This is like octo bottom. Okay, I don't know whether that makes sense. So that's what I mean by tops and bottoms. So this is what I mean by higher lows. Okay, we could also have lower highs. Okay, lower highs represent a downward trending market. So if I wanted to get inputs, especially if we're in a supply zone, let's say there's a supply zone here. Okay, see how we're high here? And we try to push price up again, but we have another high, but this high is lower than this high. This is what we call lower highs. So higher lows over here and lower highs over here. And these two things mixed with double bottoms start giving you clues about price action, about what's really happening, whether we're going to get continued momentum, whether momentum is starting to slow down, especially if we're in a supply and demand zone or a major support or resistance level, or also a pre-market high or low. Pay specific attention to see whether we see double tops, double bottoms around that area, or lower highs or higher lows, because we're usually going to get a reaction. I mean, look at today on SPX, right? Look at today on SPX. Let's go on this side, guys. Okay, this was yesterday's. This was 2 days ago, guys. This was the low 2 days ago. And I usually will have this marked on my chart. And we go into this a little bit more in the section where we talk about our sniper plays. But let's say I marked the low of 2 days ago. And today intraday is here. Look at how we pretty much had a higher low. What did I tell you guys? A higher low at this support level, and then boom, we pushed up, right? So if I was watching this low of day from 2 days ago, and I had it marked on my chart, and then we had a higher low, and then we had an RBR up here, oh my gosh, that is signal entry to get into this trade and ride calls up and then take profits. Or you can get in a little bit early once we break the base of this candle and take it all the way up, kind of like you're trading a mini RBR to the upside. So double tops, double bottoms are super important. You're going to hear us talk about it a lot. double tops, double bottoms, higher highs, lower lows. So get familiar with them. Watch this video over and over and over again. And then look for them on your charts, okay? Plot your resistance and support levels and see whether any areas where we get double tops, double bottoms, higher highs, lower lows. Draw your demand zone areas or your supply zone areas. Are we getting higher highs or lower lows in those areas to give you a clue that, hey, we might start reversing here. So, hope this helps, guys. I'll catch you on the next one.